Can you have a CTC of 15.85 lakh rupees and still end up paying zero tax? Well, most people like me will think that if their income is about 12 lakhs, there's literally no way they can save tax under the new tax regime. But wait, watch this video till the end to know how you can actually optimize your CTC structure and pay zero tax on your salary up to 15.85 lakh rupees. So firstly, let's make few things very simple. So if you're under the new tax regime, any income up to 12 lakhs is technically zero tax because of the rebate under section 87A. Now anything about 12 lakhs, you start paying taxes. So if you go to clear tax income tax calculator right now and put in your salary of 15.85 lakh rupees, so your tax liability comes out to be around 1.10 lakh rupees. Now to reduce this tax liability to zero, there are a few things you need to do. Let me walk you through them one by one. Firstly, meal vouchers. So after budget 2026, the government introduced a new tax saving hack. So salaried employees now get a meal exemption for lunch and dinner in the form of Sodexo card or coupon vouchers. Now the change is that the government has increased the exemption from 50 rupees per meal to 200 per meal. That's 4 times jump. Now I know this sounds very small, right? 200 rupees? Not a big deal, right? But hold on, let's actually calculate how much big impactful this is. So 200 rupees per meal, 2 meals a day, that's 400 rupees a day. Now multiply that by 22 working days in a month, that comes out to be around 8800 a month. And over 12 months, this comes out to be approximately 1.05 lakh a year, completely tax-free. Just from the meal vouchers alone, you have saved over a lakh rupees from your taxable income. Now, second part is PF or Provident Fund. So friends, you can invest up to 12% of your basic salary in your PF, and the amount that's contributed by your employer is completely tax-free in your hands. So that's the key word, employer's contribution, not the employee contribution. So how is this actually calculated? So basically it's 12% of your basic salary. Now since your CTC is already 15.85 lakh rupees, your basic salary is usually assumed to be 50% of that, which comes out to be around 7,92,500. So 12% of this amount will be 95,100. Now let's add everything together. So total deductions as of now are 1,05,600 from the meal coupons plus 95,100 from the employer's PF contribution. So this takes your total deduction so far to 2,07,000 rupees. But wait, we are not done yet. Now the third one, and this is the easiest among all. So the third one is standard deduction. So every salaried employee in India automatically gets a flat 75,000 discount from the government if they offer new tax regime, obviously. So we add another 75,000 to a total deduction pile. Now the total deductions comes out at 2,75,700 rupees. And your net salary at this point comes out to be around 13,09,300 rupees approximately. Now you might be thinking, wait, 13.09 lakh is still above the 12 lakh limit. Like, so zero tax kaise hua? So how do we actually cross the final line and hit the zero tax? Well, that's where a last move comes in, which is the National Pension Scheme or NPS. So friends, NPS is basically a retirement savings plan run by the government. And here is the cool part, under section 80 CCD2, your employer can contribute up to 14% of your basic salary into your NPS account. And that entire amount is actually tax-free. So 14% of your 7,92,500 base salary comes out to be approximately 1,10,950 rupees. Now we subtract this final 1,10,950 from a net salary of 13,09,300 rupees. The total taxable income lands at approximately 11,98,350 rupees. That's just under 12 lakhs. So basically your final tax liability, it's finally zero on a CTC of 15.85 lakh rupees. Wait a minute, before you run to HR department or finance department, few things to keep in mind. First, your company has to actually offer all of this in your salary structure. Without that, kuch nahi hone wala. Meal vouchers, employer PF, and especially employer NPS contribution don't come automatically for most of the organization. You need to ask your HR to restructure your salary. Some companies are flexible, some are not. Second point, money going into the PF and NPS isn't the cash you can spend today. It's actually logged in and supposed to be used for your retirement planning. So yes, your tax does become zero, but your monthly take home will be slightly lower than someone who just takes everything as cash. So it's a trade-off, pay taxes now or save for later. It's something you have to decide. Now third, the above calculations apply for income earned in financial year 2026-27 only. For the current tax season, the meal coupon exemption is still not available under the new tax regime. And also it will be just rupees 50 for the old tax regime as well. Now another thing, the above tax calculation assumes that the taxpayer does not have any other income apart from salary. And of course, please talk to a tax expert before making any changes to a salary structure, because every person's situation can be different. Now, if you like this video, please make sure to subscribe to our channel, and in case you have any doubts, please comment them down below.